Hello, good evening. Everyone can hear me? Can hear? Okay, good afternoon, everyone. Thank you so much for spending your valuable lunch time attending this webinar. Really appreciate that. My name is Jeff from Retail Marketing and Investment Bank. Today, we have invited Silverlake Axis, a company that build their business based on the software engineering development and very much focused on finance technology, which has customer base from banking sector, insurance, retail, and even government. Founded by Mr. Goh Peng Oi in 1989, their 30 years experience in fintech industry have helped many of their clients transform their business into digitalization. Forgive me, I try my best to understand more in depth about their product and services in order to explain further to you, but I believe it will take ages for me to reach into the fundamental core. So I will believe the best person for this part. Please welcome Mr. Anil Gill, a Senior EVP, Strategic Finance and Chief Risk from Silverlake Axis. Hi, Mr. Anil. Thank you for joining us.
Hi. Thank you, and good afternoon to everybody. Thank you for having us on. Can you hear me loud and clear?
Yes, loud and clear.
Okay. I think I'll share my screen, and then I have a deck that we can run through, and then after that we can do some Q&A as well.
Sure.
Okay. Can you see my screen?
Yeah, can.
Okay. So just to start off, I think thank you for the introduction. As you know, Silverlake is now a 30-year-old company. So we've been innovating around the core banking software space for a long time now. I think we will go through the evolution of the company from where it started to where we are today. Just in terms of the basic fundamentals, we're still very much founder-driven and founder-run. Our chairman and founder, Mr. Goh, is still a 74% shareholder of the company. And so in terms of banking, we have two main products, which are our traditional core banking solution, which is called SIBS. And then we have a new digital banking solution, which we started developing about 8 years ago. And this is obviously to compete with the likes of the new fintechs that are pervasive in the economy right now. We have insurance under Fermion. We have some retail, and we have some government under QR and XIT. So in terms of what we do provide, we provide an end-to-end solution for all banks. Also, we provide digital identity, eKYC, as well as insurance claim processing options for insurance companies. The biggest business by far is our banking business, which contributes about 80% of the revenue to the group, and about 90% of the profitability comes from the banking sector. We'll go through some of our main clients. So in key customers in some of them below, CIMB, UOB, Hong Leong, OCBC, Maybank. I mean, we have more than 40 individual bank customers in Southeast Asia, and that's growing as well. So what is a core banking solution? So it's a system of records. So inside the system of records, we hold the customer information files, all the details about the customer. It's also a system of part of a system of record. It also does all the transactions. So every time you do a transaction with your bank, if it's an ATM transaction, if it's an online transaction, it hits the core banking system. So the debits and the credits are hitting the core banking system. Apart from that, all products are loaded into the core banking system. So for calculation of interest for loans, for fixed deposits, changing the parameters are all included inside the core banking system. In terms of financial highlights, we're 9 months into our FY 2023. We had a record year in FY 2022. Our end of the year is June 30th, so we're very close to our end of the year. In terms of our FY 22, we closed at 736 million ringgit revenue and a profit after tax of 183 million. This year, we're on track to beat that, just based on a run rate of 9 months of 563 million and a net profit of 134 million. In terms of our statistics, I mean, our typical GP margin is in the range of 55 to 60%. Our net profit margins are in the range of 20 to 25%. 25% is a target for our profit after tax margin. We have a high 30s EBITDA margin and ROE of around 19%. If we go into a bit more, if there's any, I'll go through very quickly some of the other elements of the deck, and then we can always dovetail into questions. So just a little bit about the group. I won't go through this. Of course, what we want to be is we want to be a solutions partner to all our customers, not just to sell them software, but to be a true partner with them as they evolve. And as you can see, as the last 10 years has seen an incredible amount of change in the digital banking space, a lot of pressures on the banks to transform, to do offer new products, offer new services, as well as improve their processes. So this is what Silverlake can provide for them today. In terms of implementation, we have a 100% customer track record of implementation. A core banking implementation is a large scale, expensive, time consuming, and because of all these reasons, it is very, very important that the bank select the right vendor. We've deployed applications for over 370 customers over our track record of 30 years. Regions, we're mainly ASEAN focused. We do have a little bit of business in the Middle East, Africa, not much else past Eastern Europe though. And there's a reason for that. We want to remain focused on markets that we are very comfortable to be able to supply our services. And so as you can see in the middle here is the core solutions and the core integration. That's where a lot of the transaction base of the banking industry sits here. Then you have an integration layer, which is also built by Silverlake. So this integration layer allows you to the core banking system to talk to third-party applications as well as other front-end applications. And also omni-channel services. These are all your various products as well as your channels into the core solution. And we have, so this is how you see the entire core banking configuration look like. You have delivery from branches, you have, your collection systems, you have some analytics as well. You have a loan origination system, as well as product factory, which allows the bank to, assemble products very quickly and go to market faster than they would. We've been listed in Singapore since 2003, so this is our 20th anniversary of our listing on SGX. We have obviously acquired a lot of companies over the years, as you can see from this slide. The last acquisition we did was in 2019, and since then, of course, we have been, we've taken some time. There's been COVID in the middle. We've been spending a lot of money on R&D. We're now at 7% of our revenue on R&D, so we're developing a lot of our software internally at the moment. In terms of, there's a big talk these days about ecosystems. Ecosystems basically are just allowing a company like Silverlake or any software company. Is very difficult for them to produce all the applications that a customer would want. So what's very important and very key is to be able to integrate with those third-party applications through API layers. And those layers need to make sure also that there's no contagion to the core. Core banking systems are integral to the banks, and they're also highly regulated by the regulators. If you see any bank that has an issue with a core banking product, you will see the regulator step in quite quickly thereafter. So we provide a bank with all these third-party applications as well as insurance, and we have a retail ERP, but it's a very small business, the retail side, and it was very heavily impacted by COVID. So we're just building it back up from what's been a very small base. We serve over 40% of the top 20 largest banks in Southeast Asia, and top 3 of the largest 5 ASEAN financial institutions are also our customers. As you can see from this chart, in 2005 our revenue was 27.8 million. and growing to 736 million in FY 2022. Bulk of our revenue, 67% of it comes from maintenance and enhancement services. These are services to our existing customers. Some are based on long-term contracts with the customers, which allow us to maintain the system. Secondly, enhancements are whenever they want to do parameter changes or configuration changes, then these are built in and we charge them separately for that. I think we won't go through that. We have obviously a board of directors that has multi-year experience. We have now reaching almost 2,000 employees spread across 10 offices across the globe. These are some of our wins. This acquisition, this is the last one in 2019. It was a company based out of Latvia, and they have eKYC and digital identity solutions. They do a lot of e-passport for governments and also for the Provident Fund. So we won't go through that. In terms of banking, our core solutions handle more than 300 million transactions a day for our customers. We continue to grow our customer base and our regional base as well. And as we said, the transformation element is key. We want to partner with our customers to enable them to achieve the transformation that they are keen to do. Quicker time to roll out products, digital initiatives, as well as greater operational efficiencies. We're going to cut down, the time to market for products, as well as to make sure that whatever processes the bank has now been have been truncated. This is a product offering that we are now able to offer to our banks. We have the SIBS Mega Core, which is a highly stable, very true and tested product. This is on-premise at the moment because it's run on the IBM AS400 series. There's no cloud enabled version, but it's being built. Then we have our integration layer, and we have a Mobius Core, which is fully cloud native and allows the bank to have a front end which can rival any digital bank in the world. Since up to today as well, we also are able to offer our customers the Mobius fully digital core as well. So then if you can have the Mobius core, you don't need the integration layer, and you can just have the Mobius core and co-core. So there's multiple offerings that we can offer. So what does that mean? What's the value to our customers? Okay, performance is one. Mentioned product delivery a number of times. How we can bundle, we can campaign, we do pricing. Of course, we have universal banking solutions. We have Islamic as well as conventional. We have retail as well as corporate. We have cash management capabilities. We have open banking so that we are able to open API. And we have an API library. We can open it to the core banking system. It's a rule-based access, single sign-on, and multiple authentication. And because it's on-premise, it's also very secure and stable. Okay, these are just trends. I mean, the tech trends, are again, it's a little bit outdated. They're rising. I think this one is interesting in the sense of how does our revenue model work? And it works in this way. We have an initial sale of a license. This is changing somewhat. I'll go into that later. Then we have project services. This is the customization and the implementation. After that, we have upgrade and expansion, as well as maintenance and enhancement revenue. This is what you call a traditional on-premise model. We also have today a software as a service model that we are able to offer our customers where it's all blended. All this is blended into one fixed price, and that's charged over a multi 5-year, 10-year contract with the banks. Insurtech and retail is pretty much, it's a small part of our business, but something that's growing very fast. We have the leading claims management processing system in Southeast Asia, which is called Merriman, which we now put under a Fermion, which we put two of our companies, Cyber Village and Merriman, under one umbrella, Fermion, to get some synergies out of them. And so now so this is what we process. We process $10 billion worth of claims, 150,000 claims monthly. We have ecosystem partners of more than 12,000 people and 150 plus insurance and technical operators, and we operate in 10 markets in Asia. So this is a claims management module. So most of the insurance companies now do not want to handle claims management. So all of that is done through our system now. And I won't go. I can share these slides with you after this anyway. So this is our retail. It's just very small. In terms of key financials, like I said, almost a 20% top line growth in FY 2022, and a 28% growth in our bottom line profit after tax. Very strong balance sheet. We have almost no debt. We took a small amount of debt just to help our capital structure last year. We've got net cash of 550 million ringgit, and so we're very strong financially. And there's a dividend. We haven't paid. We pay annual dividends now. We used to pay quarterly. Since COVID, we've taken a more conservative stance to dividends. Okay, that's all for me on the slides. We can now open up to questions. If anybody has any questions, then we can start answering.
Thank you, Mr. Anil. Guys, if you have any question, please drop in the chat box now. Or you can raise hand so I can unmute you. Okay. Okay, Mr. Chow, you are unmuted.
Hello.
Hi, Mr. Chow.
Hi. Yeah, hi, Mr. Anil. So just now you mentioned the software licensing, there's a change in the model. Could you elaborate more on that?
Yes. So in typical traditional software delivery models like companies like ours, like I mentioned, there's three components. The initial license, which has a typically very high margin, license margins in the 90% range. And then there's a significant amount of customization as we deploy the software at our client site. So that's what we call project services. And then after that, once the software goes live, we go live, then we have the maintenance contract, which is typically around 10% of the cost of the implementation. So the implementation, for example, is 100 million ringgit. A typical maintenance contract would be 10 million ringgit per year. And why would a bank require a maintenance contract? They require it to make sure that the software is working to specification, to performance. And this allows them to, this is our, in a way, to make sure that it operates at an optimal level. However, we also have another revenue stream, which is enhancement revenue. That's when a customer, let's say he wants to integrate to WeChat or WhatsApp, or he wants to integrate to a third-party application. Because our software, we don't sell source code. Our software is all closed. We have to go in there and we have to do the changes to the software ourselves. And so we charge them separately for that. So now that can be for a bank, can be, well, it's not about expensive, it's about unpredictable, right? Because they don't know how often they need to do an enhancement. And because they don't know that, they also sometimes are unable to budget. For example, during COVID, when all the regulators told all the banks that they had to give moratoriums on loans, they had to come back to Silverlake and get all those parameters changed because they can't even do that themselves. They can't even do like a 6-month moratorium because the system is so closed. So it has its advantages having a closed system. That's security, of course. So now what I mean is that we can go to the bank and say, fine, look, there's no more of this maintenance enhancement. There's no more of this license. Rather than, we will say, okay, fine, it's 15 million ringgit a year for 10 years. And in that 15 million ringgit a year, we deploy the software, we do the customization of it at the point of sale. And after that, we maintain it, whatever enhancements, as long as they're within the approved list of enhancements. I mean, you can't go too far. We all do it within that one. And what happens then is it becomes an OPEX for the bank rather than CAPEX. There's no investment in hardware as well. Fully cloud, right? So that it changes the model for the bank. They're able to budget better for them. So that's what I mean by the pricing model. It's called a SaaS-based pricing. So then that also gives us our annual recurring revenue, right? The ARR, which is so important today.
Yeah, okay, understood. Thanks.
Welcome.
Thank you, Mr. Anil. There's another question from the chat box.
I saw.
Yeah.
I mentioned this product Mobius, which is our digital banking platform. So this has been ready for 2 years now. So we've gone to market with it for 2 years. There's still some parts of it that are being built, so it's not 100% ready yet. So I think in terms of new product, that's one thing that we're doing. The other thing that we're building also is a wealth management platform. So I mean that's a big area today in banking. Everyone's talking about wealth management. So those are the two areas that we're building. I think the bigger piece is it's taken us 8 years to build Mobius, because unlike if you look at many of our competitors around the world, Temenos, FIS, Finastra, they've gone out and bought people who have this suite of products. The problem with buying someone is that, of course, you've got to pay a very high price. Whereas if you develop it in-house, it takes time, but it's much cheaper. So we've developed this new product. It's much cheaper to go to market, and we've commercialized it in 3 sites already. And we just had a big win in Malaysia with a large local bank where it's a SaaS model, 10 years plus 5 years, and it's our new product, which is Mobius. So we're not like to answer that question, if I look back as well, it's like, we're not like a Microsoft Word or, our software is very code heavy. Our software takes a long time to test and deliver. So we do enhancements and we do features, but if you're talking about actual new products, it's a long cycle for us.
Thank you, Mr. Anil. Any other question? Okay, I think the question. Okay. Also from Mr. Chow. Yeah.
Mr. Chow. Unfortunately, our standard answer for that question is always that, and I hate to be very boring on the topic, but we do look at a lot of target companies over the years. We've looked at, I would say we look at probably about 10 a year, but we've become very selective. And the reason we've become very selective is, the success of integrating an acquisition is very low. And a lot of acquisitions fail, so we're very, very careful. And our appetite to do too many it's taken us about 3 years to integrate the 2019 acquisition. Of course, it was compounded by the fact that it's based in Europe. And I think that we look at acquisitions, but we're fairly disciplined about what we take and the pricing, except for maybe the first half of this year, the pricing has come down. But if you talk about 2021, 22, 23, the early part, some of the multiples that we were seeing, we were not willing to pay, but we thought they were very, very, very expensive. But yes, we do announce our acquisitions, but we only announce them, of course, upon either term sheet or completion. So unfortunately, we can't talk about targets that we are currently reviewing. Mr. Kam, as you know, as an investment banker, yeah, these are the things you have to be particularly circumspect about.
Yeah. Okay, I see no further question coming in. So, okay, guys, if you have any further question, feel free to email to us. I will post it into the email, and I will forward it to Mr. Anil if any of the question.
And I can also share the deck with you.
Yeah, sure. Thank you, Mr. Anil.
Thank you very much. Thank you for your time.
Thank you, everyone.
Thank you. Bye-bye.
Bye-bye.